back from a little vacation that I had for a couple of weeks, and I'm back live. It's Saturday, October 9th. I'm here live again, guys, trying to, you know, trying to do these live streams every Saturday. But, when I take a little break, I know people get worried out there, but I'm back. So let me introduce myself, Joe Saglimbeni. I am a blue collar worker, been investing in the stock market for over 3 decades. And this is my live stream. Let's chat live. And I try to do it every Saturday. So when this thing becomes a video, when this live stream becomes a video, share, comment, let that algorithm work for me. Give it a like, give it a thumbs down if you don't like it. And obviously, come in on the live stream and say hello. So today, I wanted to talk about, I've been thinking about this for a little while, and I've been thinking over the last couple of decades how I invest. So I figure I'd show or maybe explain videos on, or maybe even live stream on how exactly I was able to succeed in investing. So if you guys have followed my channel for almost 2 years now, I have a video on how I beat the S&P 500, and I did roughly 20% per year for the last decade against the S&P 500, and I did it with individual stocks, mostly individual stocks. And how I did it is I you know I learned this knowledge over many decades, and it's not easy to explain this. Uh, always to explain this. I tried to explain it in my vlog. I mean, my blog, accessnotdenied.com. And even in the written word, it's hard to explain. But I figure once in a while, I try to explain this and try to make it easy for the viewer on how to be successful when it comes to individual stock market investing. Now, I always say, and I want to make a disclaimer here now that I am not a financial planner and I don't even play one on YouTube. I am an investor and I'm giving you my opinion and on how I invested over the years and possibly how I will in the future. So always do your due diligence and reach out to a professional financial planner or somebody who can manage money if you are confused about all this stuff. That being said, I always tell new investors, so many people come up to me at work, friends, family, even here on YouTube and from my writings. And they always come up to me and they say, Joe, how do you find these stocks that perform so well? And it it took many it took many decades, yet it's so simple. And I really didn't realize it maybe until about 10 years ago or 12 years ago, something like that. And it all starts with the charts. So, what I mean by that, and I'm going to try to show it, what I mean by that is a stock, a chart that follows a stock that has a chart. You can go anywhere. You can go to Google, you can go to Yahoo Finance, and you could put in a symbol and you'll get a chart over the last 10 years, 5 years, all the years, 1 month, 3 month. So, hello, 1212, how you doing? Can you hear me well? Give me another thumbs up if you can hear me well. So, basically, what I mean is you I can literally give you a chart, right? And it could be a very good looking chart where it just moves up and it continuously moves up. And basically, that chart, that visualization is telling you something about the equity that it's associated to. That's how you begin. That's how I begin to invest in individual securities. So I'm gonna share something on my screen, and let me just share it on my screen here. And this is a website that I go to once in a while called Macro Trends. And on this website, you could put in a stock and you can see revenue and how revenue grows over time 5 years, 3 years, 2 years, 1 year. Now, the reason why I'm showing you this is because a lot of people, when they invest, they end up they end up looking at this first revenues, sales, maybe even the market cap, how the market cap is growing. And yeah, you can get a lot of that. So when you're looking at this, this is Ford Motor, the stock for Ford Motor. And if you see this right here, you're going to see that Ford trailing 12 months revenue, and revenues basically is sales that the company makes. And if you see the sales are either not really growing or going down, right? And from there, you could see that maybe there's an issue or there's a problem. But I'm going to show you that you don't have to look at sales or revenue first. I think you should look at the stock chart of this company first. So I believe I have Ford here somewhere. Here we go. So let me first take these two indicators out. And here is Ford for the last 5 years. So let me see. Now, you guys should be able to see that. And you should see that Ford over the last 5 years has basically not done much. It's done 14. I think this will show 14% over the last 5 years. Okay. So I am a long term investor. So understand that when I look at a chart, I'm thinking long term. I'm thinking 5 years. So I could tell you 5 years has been terrible for Ford. Okay. Now, when we went to those revenue numbers, you'll see that the revenue was basically the same quarter over quarter, year over year, and then it starts declining. And this could be pandemic related issues, right? But if we go all on macro trends, you're going to see that Ford's revenue has basically gone down, in my opinion. Down, nowhere but down, in my opinion. So, what I mean by that is you you will realize that from the chart that this company is not that good. That's all I mean. So, for example, let's go to another chart, right? And this time it's going to be Google, all right? And I will take the S&P out of here. And you're going to see 5 years again, Google. You'll see 5 years this chart, and let me take my name out of here so you guys can see it clearly. You're going to see that this chart is basically going up. For the last 5 years, it's been going up. So to me, that says something positive, something good. You could even take the Google name out of this. You could take the stock symbol and throw it away. This representation is telling me something positive. So let's check out the revenue numbers for Google Alphabet. So we'll go back here to macro trends and we will check out on our macro trends. And again, this is free macro trends. So real quick, you get a snippet here. Alphabet revenue for quarter ending June 30th, 2021 was 61 billion, a 61% increase. And then it goes down a 32% increase, a 12% increase, an 18% increase, and a 23% increase. And then let's go to the revenue. 5 years of revenue. What do you see? Look at the representation here. Let's look at all the dates. And these dates go back, looks like to 2006. All right. And what do you see? A beautiful looking revenue chart. A beautiful looking revenue chart. And this is what it comes down to. Visualization. That should take you to the next steps. You look at the chart first. You see the chart is good looking. Let's go max here for Google. And you'll see the chart goes up beautifully. And now you go to Alphabet revenue and you see the revenues continue to increase beautifully, unlike Ford. So, what I basically am saying here is that start with the chart. It all starts with a chart. If somebody wants to know about an equity, they throw a name at me. They throw Ford at me. I put Ford into a chart. Google, Yahoo Finance, free tools. Put it in the chart. Then I'll go to macro trends, look at revenue. If for example, I don't have a full service brokerage like Fidelity or Vanguard or TD Ameritrade, I may I may end up going, you're going to get a lot more tools from a Fidelity. And how you doing, Edwin? How are you? Uh, you may get many more tools from Fidelity or TD Ameritrade. And I got to tell you that if you don't have Fidelity, Hood, or SoFi, or Weeble, well, Weeble's got some tools, but let's say an app, a money app, or you just don't want to go deep diving into those tools, you could basically go to Yahoo and Macro Trends, and you could start looking at an equity. Start with the chart, go to the revenue, and then do another analysis or have somebody do an analysis like me for you. So a lot of times my niece or my nephew or my friend will come up to me and say, Joe, a broker gave me this stock. A money manager said this stock is good. This company is good. I will grab that company from them. I will do the analysis of it for them and I will give my honest opinion. Now, again, not a financial planner. This is not financial advice, but with my friends and my relatives, I try to help them as much as I can. And over the decade, I've outperformed the S&P 500. So if we go back to this Google chart, so we'll go back to this Google chart and I will put in, and this is again on Yahoo Finance, I have Alphabet Inc. in GOOGL. I'm going to compare the S&P 500. And what you're going to see is Google over, and this is max, but we're going to go 5 years. Google over the 5 years has done almost 250% in return, and the S&P 500 has only done 104%. So Google's doubled that return. Now you had to wait a long time. And again, this is not showing dividends. I don't believe Yahoo shows dividend reinvestment, which would help the S&P 500 a little bit, but only a small amount. So when you go to something like a Fidelity or some other charting service that shows dividends reinvested, you'll even get a better. Matter of fact, I don't know if anybody's seen that great. I'm going to actually let me put this on that way. So now that you see, so 104% for the S&P 500 and 250% for Google. Again, many brokerages and tools that you pay for will show you reinvested dividends, and you'll see a better showing for the S&P 500, but not that much. And Google does not pay dividends. So again, what I'm trying to say here is that I'm trying to tell you that it starts with the charts. You don't even have to know that this was Google. You start with the chart, you get the symbol, you put the symbol in the chart, and if the chart looks like this, then you're starting out pretty good, to be honest with you. All right, so let me get back here real quick. All right, so that's really it, guys. So I just wanted to make a quick live stream about that. And what I think every once in a while I'm going to do, and maybe even on the Saturday live streams, is kind of pick some of funny. The chat's funny. You you I'm going to show you some of the equities that I own, and I'm going to try to give you the reason why I have been investing in this equity. All right. And there's an example with Google, a small example of revenue growth. And then maybe I will talk about why I may or may not like a company like Alphabet, or why I may not like a company like Ford. All right. And that is hopefully the chat today. Uh, let's show this one. Miss Pissy Pants says, I dropped my wig. Very good. Give me a like. Give me a like on that. So again, that's really what I wanted to explain, guys, today on today's live stream. So hopefully, you guys enjoyed this live stream, and hopefully, I can get you there on investing, because I think that stock market investing is so important for regular middle class Americans, and that individual stock investments can take you to another level. But you have to play it smart. You got to be smart about this. It's not easy. Read your books. I released a video about my top 4 or 5 books, and you read those books. Check out my video. Maybe I'll try to leave it in the link if I remember. All right. But again, guys, that's it for today's Saturday live stream. Let's Chat Live. I'm back again. I was on a little hiatus, away for a little while, but I'm back, and hopefully you guys are are enjoying this live stream and get some ready for some more videos and live streams. And hopefully everyone is doing well and is safe. All right, so I'm going to say goodbye, and I will see you next Saturday. Goodbye.